Look, stay with me. What I am about to explain sounds unbelievable until it happens to someone just like you, a senior who did everything right, mortgage paid, decades of work behind them, a quiet life finally earned, and yet in 2026 that paid off home can still disappear. Not because of a missed mortgage, not because of fraud, not because of recklessness, but because of legal pathways that most Americans never learn about until it is too late. Here is the part that should get your attention. At least one of these pathways applies to almost every senior homeowner in the United States. This is where it gets important. Stay with me until the end, because I am not just going to explain what can go wrong. I am going to give you a clear, simple checklist you can actually use, and I will show you exactly which offices and institutions can help you when banks do not answer and agencies stay silent. This information is the difference between reacting too late and protecting yourself in time. Stay with me. My name is Judith Carver. I am a senior protection educator. My role is to slow things down and explain what is really happening in plain language so you can make informed choices. And I want you to hear this clearly. Your rights do not expire with age. Now listen carefully and stay with me, because this is where most seniors get caught off guard. There are 4 legal mechanisms that can cause a senior to lose a home that is fully paid off. They are not rare events. They are not extreme cases. They are not things that only happen to careless people. They are happening quietly every day to ordinary Americans who believed ownership meant safety. And pressures building as we move into 2026 are making these outcomes more common, not less. Most people never notice this until a letter arrives that does not feel urgent, does not sound threatening, and does not look dangerous. That is how it begins. The first mechanism is property tax foreclosure, and this is the one that shocks people the most. You own the home outright. No bank, no lender, no monthly mortgage payment. You believe that means peace of mind. But every single year, your local government places a legal claim on your property for that year's property taxes. That claim exists whether you open the mail or not, whether you agree with the amount or not, whether you have lived there for 10 years or 50 years, it comes before everything else, before medical bills, before credit cards, before old loans, before family obligations. Here's the part nobody explains. The moment a payment is missed, the process starts automatically. There is no human judgment call. No one checks to see if you are sick, widowed, or living on a fixed income. Penalties begin to add. Interest begins to grow. Fees quietly stack on top. And because this process moves slowly and silently, many seniors believe they still have time. They tell themselves they will catch up next year. But the system does not pause. It does not wait. And by the time the situation feels serious, the options are already shrinking. This is not about irresponsibility. It is about how the rules are written. Let me show you exactly what happened to a woman named Ruth. She was 73 and lived in a small Midwestern town. Her parents bought the house in the early 1960s. It was paid off before she retired. One winter, the furnace failed. Repairs drained her savings. She skipped one tax payment thinking she would catch up. Penalties added, interest added, fees added. By the time she understood what was happening, the amount had grown far beyond the original bill. The county proceeded. The home was sold. Ruth did not just lose the house. She lost decades of equity. She did not see this coming. Most people never do. Here is where it gets interesting. Property taxes are rising faster than fixed incomes. Assessments climb, insurance costs explode, seniors are squeezed. Some states offer relief. Others require applications that must be renewed every year. Miss the deadline and the protection disappears. No warning, no phone call. Watch out for this. Paid off does not mean protected. The second mechanism is estate taxation. This one affects families who never thought of themselves as wealthy. Right now, there is a temporary federal estate tax exemption that allows a large amount of assets to pass without tax. That expanded exemption is scheduled to expire at the end of 2025. If nothing changes, it drops significantly. Estates that were once safely below the line may suddenly cross it. Pause for a moment. Picture a retired couple, a paid off home in a high cost state, retirement accounts, some savings, comfortable but not extravagant. When the exemption drops, their estate becomes taxable. The tax bill arrives within months of death. It must be paid quickly. If there is not enough cash, assets must be sold, often the house. This is not punishment. It is how the law is written. The untold truth is that planning early can reduce this exposure. Waiting removes options. Timing matters more than income here. The third mechanism is Medicaid estate recovery. This one hurts the most emotionally. Long-term care is expensive. Few families can afford years of nursing home care. Medicaid steps in when assets are low enough. While the senior is alive, the home is often exempt. That creates relief. But after death, many states are required to seek repayment from the estate. The house becomes the primary target. Let me tell you about Helen. She lived alone. Her son helped when he could. Dementia progressed. A nursing facility became necessary. Medicaid covered the care. Helen believed her son would inherit the house. When she passed, the state filed a claim. The house was sold. The proceeds went to repayment. Her son received nothing. He did not see this coming. This is the part nobody talks about. Medicaid is helpful, but it also has recovery rules, and they are legal. There are lawful ways to protect a home from this outcome. They require planning years in advance. Transfers done too late can trigger penalties. Trusts done incorrectly can fail. This is not about hiding assets. It is about understanding rules that already exist. The emotional cost of not knowing is enormous. The fourth mechanism is reverse mortgage foreclosure. This one is marketed as relief. No monthly payment. Stay in your home, use your equity. What is not emphasized is what never goes away. Property taxes, insurance, maintenance. Miss those and the loan can default. Let me show you what happened to Frank. He was 75 and lived in Florida. Medical bills piled up. A reverse mortgage felt like breathing room. He used the funds to stabilize. But taxes rose. Insurance surged. His income did not. The servicer advanced payments and added them to the balance. Interest compounded. Eventually, foreclosure occurred. Frank moved in with family. His equity was gone. This is structural, not rare. Now stay with me because this is important. These four mechanisms feel overwhelming together, but every one of them is manageable when addressed early. Property tax loss can often be prevented through exemptions, deferrals, or payment plans, but you must apply. Estate tax exposure can be reduced with timely planning, but deadlines matter. Medicaid recovery can sometimes be avoided with proper structure, but timing matters. Reverse mortgage risk can be reduced with honest budgeting and alternatives, but assumptions must be challenged. Most people never notice the pattern. Notices arrive in dense language. Deadlines pass quietly. No one calls to remind you. The responsibility is placed on the homeowner. That is not fair, but it is real. Now bear with me until the end, because here's the checklist I promised. First, know your property tax status and ask your county what senior relief programs exist and when applications are due. Second, understand how upcoming estate tax changes affect your family and whether planning now preserves options. Third, if long-term care is a concern, learn the Medicaid rules before a crisis begins. Fourth, if considering a reverse mortgage, calculate taxes and insurance for the rest of your life, not just this year. This checklist alone can prevent irreversible loss. Pause for a moment. If any part of this felt overwhelming, That is normal. I want you to know this. You do not have to figure this out alone. What you are seeing on the screen right now are legitimate places to start. These are public resources created to help seniors just like you. If you need help with property taxes, benefits, or local programs, your state's Aging Services Department can guide you through what is available where you live. If property taxes are a concern, your county assessor or tax collector is the right place to ask about senior exemptions, freezes, or deferral programs that many people never hear about. If you are dealing with a tax issue and feel stuck, confused, or unheard, the IRS Taxpayer Advocate Service exists to help people in exactly that situation. And if you want to see what benefits you may qualify for, the National Council on Aging offers a free benefits checkup designed specifically for older Americans. Pause here if you need to. Write these down. You can come back to this. These resources are here to support you. Now listen carefully as we close and take a breath with me. If any part of this felt overwhelming or unclear, that is normal. These systems are complicated by design. I encourage you to rewatch this calmly and let the information settle. If a situation ever feels legally or financially complex, reach out to a licensed attorney or qualified professional who can give you guidance specific to your circumstances. You do not have to figure this out alone. Please also share this video with a senior friend, a family member, or a neighbor who owns a home. Many people lose everything simply because no one warned them in time. One share can truly prevent a painful loss. And if this information helped you, like this video and subscribe to the channel so I can continue bringing you clear, practical guidance for seniors. If there is a topic you need clarification on, leave a comment. Tell me what confused you or what you want explained next. I read every comment and every email personally, so do not hesitate to reach out. Your questions help shape future videos. You deserve calm, clarity, and respect. Carry this forward with you. Your rights do not expire with age.